Talking about family.
Okay, so let's go.
First one from here.
Okay. So someone should read for me requirements first. You don't have a question. Are you not on the platform?
December, October, and November showing.
Okay, so we prepared a cash budget for September, October, and what? November. Go.
Showing clearly your supporting schedules for the cash collection and any other workings.
Okay, so you see how 13 marks is there, and the examiner has emphasized that we should show our workings for the schedules of what? Cash collection. It means that is a priority for the examiner because that is one of the core things that will be there. So from note 1 to note 3 is about that cash schedule issue. Note 4 is about the purchases budget, and that is all the workings you will be doing. So let's go to the question now. So read the question.
Irabna OK is the management accountant for Chartered Limited. Irabna is planning on how to finance the operations for the final quarter of the year. Chartered Limited has a financial ending of 31st December. The following data is available to aid the preparation of the cash budget for the last quarter of the year, October to December.
Okay.
The actual sales for the third quarter were July.
So we've seen it,
estimated sales for October, November, and December are.
Okay, we've seen that one. Now, so our focus is going to be on what? The notes I. So go.
20% of sales made in each month are for cash.
Okay.
And the remaining 80% are on credit.
Okay.
It is the policy of the company to collect 20% of credit sales in the month of credit.
The sales in the month of credit.
In the month of
sales. Yeah, in the month of sales.
50% in the month following sales.
Good.
And 30% in the second month following sales.
All right. So let's put our schedule down, and that's going to be workings 1, and that will be the collection schedule. So schedule for cash collection. So we're going to have, where does it start from? Where are we starting from? July?
Yeah, July, yeah.
So July, August, September, October, and November. So give, and December is there, okay. Maybe I need to rub this line up.
Yeah.
So we're working follow up. What are our sales?
Sales 100,000.
100,000.
120.
120,000.
90,000.
90,000.
100,000.
100,000.
135.
135.
150,000.
150,000. Now, of these sales respectively, the examiner is saying that 20% is what? Cash, and 80% is on credits. So we're going to do that. So cash sales, that's 20%. Credit sales, that's 80%. So can you punch out real quick for me? Or for those of you who have done it, just give me the figures.
20,000.
20,000.
24,000.
24,000. 18,000. 20,000. 80. 27,000. 30,000. So we take it out.
80,000. 96,000. 72,000. 80,000. 108,000. 120,000.
Good. So we now have our cash sales, no P. We're going to be taking that straight out to the cash budget. We're not going to be thinking about it. But now our focus is going to be how the credit sales will be what? Collected. The examiner is saying that in the month of sale, we're going to receive what?
20%.
20%. Month following sales,
50%.
50%. And then second month, After sales? 30%. So this is how the cash is going to be allocated. What does that mean? It means for July sales, 20% to be received in July, 50% to be received in August, and 30% to be received when? In September. So we're going to go diagonally like that for all of them. So let's go. 20% of this.
16,000.
16,000. 50% of that same figure.
40,000.
And then 30% of that same figure.
25.
Then we come to August. 20%.
19,200.
So 19,200. 50%.
56,000.
Are you sure? No.
48,000.
And then 30% of that figure.
28,800.
Okay. Let's go. September. 72,000. 20%.
14,200.
Go. 50%.
36.
Go. 30%.
21,600.
So that is it about September. October. 20%.
16,000.
50%.
40,000.
30%.
24.
You got it. November.
21,600.
And then
32,400.
that will go to Jane.
Yeah.
2,400.
2,400.
Then last one, December. Do we even need that? Okay, let's just do it. 20%.
24,000. 60.
And then the other one will go to February. How much?
36,000.
Makes sense? So this is how the money will be collected. Now, so this is where Tijani, you got a problem. So you see how we went. So that is how we're supposed to go about it. Now, our focus here is from September to November. So that's what I'll be interested in. If you have time in the exam, or you could get the totals, but you don't need it for anything. So these are the three you are interested in. So we're going to do that. How much do I have?
86.
Do you know what you are adding?
Yeah.
This is not included. These are not included. So 1, 2, 3.
Yeah.
43,000.
Are you sure you didn't lie?
86,400.
80.
6,400.
Yeah.
Who is T?
It's
Correct. Okay. So no one need.
No,
You got 76.
no, it's 86.
86,400.
It's 86,400.
So you got 76,400. Then it's wrong. Mama, surely I'm in there.
Child, the audio.
I got 86,400.
I should have called you. I should have called you.
Let's go. Next one.
88,800.
88,800. November.
83,200.
Confirm.
Confirm.
Yes. Yeah.
Okay. Yeah. I got the same things there. Okay. So let's go. Now, the reason why I made us to do this is assuming we were doing the statement of financial position. If we're doing the statement of financial position, you realize that the year ended of the company is 31st December. What it means then is that after 31st December, these amounts are what? Outstanding. So when we go to the statement of financial position, when we add these three figures up, that will go under what? Trade receivables. Does it make sense?
Yeah.
That is the idea about that. So that is the first workings we do, and that is note 1 to note 3. So 3 notes combined together, giving us this workings, and it is something the examiner will give you your 13 marks for. Oh, can you imagine? I didn't record. Wow.
Go back.
Oh my goodness. I thought I had clicked play. Alright, so let's take this again. Right, so the sales figure or the notes 4 reads that the company's cost of sales is 75% of the month's sales, whilst the closing stock computation is 40% of the next month's cost of sales. So what do? For those of you who are snapping, you're going to get Nhyira Premium in your picture. Yes. So we bring the sales figures respectively, all right? Then we calculate the cost of sales, and that is going to be 75% of the sales figures respectively. Once we do that, we get a closing stock. Remember, in the question we were told that the closing stock is 40% of the next month's cost of sales. So what do? We take 40% of 90,000 and per the calculation is 36,000. 40% of 67,500 is this, and it follows in that order respectively. Now, why do we need this? We need to compute this because of the closing stock. So after we compute the closing stock, now we can calculate the purchases budget so we can determine the payments we made to the supplier. From our concept last week, we learned that the purchases budget is prepared as follows. We bring the sales figure, we less the opening stock, add the closing stock, and that gives us the purchases figure. So what do? We follow the same preamble and substitute the figures into it. So August, September, October, November, and December. So we bring the sales respectively for each of these months, and then we bring the opening stock. Now, how do we get the opening stock? Because the closing stock for one period becomes the opening stock for the other period. So to make it easy on ourselves, we will first write down the closing stocks. Now, you got to be careful here because in the final footnote of the question, we were told that the August closing inventory was 30,000. So even though we had 27,000, we're going to be replacing that with what is in the question. And that is what you must take note of and do all the time in the exam hall if the information is like that. So we put out the closing stock. So you realize that August, we are replacing the 27,000 with that 30,000. But September, the same thing. October, the same thing. November, the same thing. And like I said, to get the opening stock for August, it will be the closing stock for July. So the closing stock for July becomes opening stock for August, and the closing stock follows like that, follows like that, follows like that, follows like that. So we do the arithmetic, and these are the figures we get respectively for our purchases. But the final part of the footnote 4 is that the company makes payment to the suppliers 1 month after the sales. So you got to be careful here. It means August purchases will be paid in September, September in October, October in November, and November in December. And these are what we're going to be using on the face of the cash budget. So that is it about the footnote 4 and footnote 7. So this is workings 2, this is workings 3. The rest of the notes, what does it say? So note 5.
Other recurring monthly expenses include wages and salaries.
Okay.
10,000 cedis.
Okay.
Depreciation on property.
Are we dealing with cedis and I'm writing dollars and you didn't say anything? Okay, you go ahead. Okay.
The dollar man.
Go ahead.
Depreciation on property, plant and equipment, 4,000 cedis.
You got to be careful here that as far as you are using the income, you are preparing the cash budget. Non-cash item must not be what included. So the depreciation there found by examiner on the other. This is all the machine manager say where do you go? But remember, if we were preparing the income statement and then the statement of financial position, then in our income statement, the depreciation figure will be there. So you must know when to use this. Go.
Utilities, 1,000 cedis.
Okay.
And other miscellaneous,
Okay.
1,700 cedis.
All right.
6. Property taxes. Of
Okay, so it means that these things are paid in the months that they occur, right?
Yes.
Okay. So we don't need to do any workings. Go.
Property taxes of 15,000 cedis are due and payable on 15 September.
Okay.
15 September.
So that is exclusive to what? September. When we get to September, property tax will be paid then. Go.
Advertising fees of 6,000 cedis must be paid on 20th October.
Okay.
A lease of a new storage facility with a monthly payment of 5,000 cedis is scheduled to begin on 2nd November.
Okay.
Irabna, the actual cash balance.
I don't even know why the name was even brought
The
there.
actual cash balance.
So
Okay.
just say the actual cash balance.
The actual cash balance at the end of August was 10,000 cedis.
Okay.
An inventory of finished products at hand at the end of August was valued at 30,000 cedis.
Okay, that's fine. So what are we preparing for? October to August rather.
September to November.
September, October, November. Okay. So we're gonna go for September, October, and then November. Now, like we mentioned last week, on the face of our cash budget, we're gonna bring the receipts, we bring the payments, then we bring the net values, then we go ahead with it. So let's go. We bring the receipts. So what are our receipts? First, the cash sales. So we bring our cash sales. That's from Workings 1. Help me out.
18,000.
Oh, we said 20, we said 18.
Cash sales 18,000.
18,000.
September.
Yes.
Go.
20,000. 27.
30.
27.
Next one. Receipts from debtors or customers. Also still Workings 1. How much we got?
76,400.
Is that for September?
86,400.
76,400.
Yeah. October.
88,000.
Confirm. November. Okay. Hey, relax.
83,200.
Okay, so this is
83,200.
and I'll be there day to know. It's a 128. Since I'm the top of your channel. Okay, is that all the receipts? Okay, so in this question there were nothing like dividend received, rent income received, so that's all. So let's add all the receipts to give us total receipts. What we got? Fastest one, please.
26 plus 8. Mine.
I because if you move your cash budget now.
104,400.
1
04,400.
180.
Yes, 100.
It's 1041.
400 is correct.
Yeah.
110,200.
I don't calculate that now. Bibi yen na.
The pressure.
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 200.
110,200. So that's our total receipts there.
Yeah.
So once we have our total receipts, we bring the payments. That's going to be a hell of a list. I'm going to close this account.
Yeah.
Madam.
My formula to give me that.
Your formula.
Yeah.
Which is your formula?
Now I solved it.
Gave you in the cash budget.
Yes.
So let me see. It's just unfortunate that you stole to get that. Sorry, 104,400. Okay, 1,800.
Correct.
Okay. So maybe this is what happened. Maybe because of the way you arrange the things, professional presentation. So I didn't. But I was not having these total figures. If not, I would have marked those ones for you. So it's correct.
So you mark by tick.
Yes, tick. So I will take those ticks. So you get more ticks. Okay, so let's go to the payments. In order for us not to forget, quickly we will bring payment to what? Supplies. From Workings 3.
Yeah.
Right?
Yes.
What we got?
114,000.
Remember the things we did. 114. Confirm.
Confirm.
Go.
90,000.
Go.
110,500.
Okay. So that's the payment to the suppliers. Then we bring the obvious things in the question, which first was wages and salaries. Inte do has say they are which ready keke. And 10,000. And then which ready and the free. We enjoy. Next one.
Utilities.
Utilities.
1,000.
Respectively. Next.
Miscellaneous.
Miscellaneous. How much?
1,700.
Every month.
Yes.
Go.
Property taxes.
Okay, so property tax.
They are due and payable in September.
Okay, so in September.
Yes.
How much?
15,000.
15,000.
Yes.
So nothing comes here.
Yeah, just
Go.
Advertising fees.
Advertising fee.
6,000.
When?
October.
Go. Is that all?
No.
Lease. There was a lease, right?
Yes. Lease payment.
In November.
In November.
Yes.
How much?
5,000.
Is that all? Mommy?
cash.
I said the purchase, the payment supplies.
Uh-huh.
So he said, August,
Will be paid in September. Is that not what they gave me?
no.
Only your phone. Oh, back.
In August, no.
Uh-huh.
It was 90,000, which should be paid in September.
No, in that case it was 115.
Who said August already naming me? August near 114. Sorry, August near 114. You left here in September. Instead of me arrowing, what is below is payment to creditors. These are purchases periods. Do you get it?
September.
But we are starting from where?
September.
And it's 114. And that was August purchases. We will pay it in September. Do you understand?
Oh,
Pressure, pressure,
Yes.
pressure,
You know.
Now listen.
pressure.
Is this not August purchases? Is that not August? 114,000. And we were told that it is paid 1 month.
No, sir, you've already done it.
Okay. Oh no, no, show you before.
No, it's like she's right too.
No.
We put this number. Right, stop snapping. Right and stop
Where?
snapping.
This.
No. This is the August purchases, isn't it?
Yes.
It will be paid in where? And I idea Ronaldo. It is here. This figures make
who
it.
said top?
What else?
Usually you.
Are you okay?
You go to right and stop snapping.
On the face of the
Oh no, I'll show different things.
Okay.
Okay, so let's go. Are we done with are we done everything?
Yes.
Okay.
Please, the cash balance at the end.
We will deal with that in a moment. Don't worry. So give me the totals, and I'll give you total expenditure or total payments. And definitely I'm going to be continuing with on the next page, unfortunately.
141,700.
I'm coming. 141.
700.
Where?
First one, yes.
Please confirm.
Confirm.
Correct.
Okay.
108,700.
Confirm.
108.
700.
Next. Okay. Now, we have our total receipts, we have our total payments. We're going to be lessing that to get a net cash flow. So net cash flows. Mami.
Papa. No,
This one.
one, two,
1, 2.
Now 1, 2 again.
Daddy, I didn't see the 5, so
1, 2, 8, 1, 2, 8, 1.
no.
Charlie. Because Jumbo punch and the element with you.
1, 2, 8.
Who punched this? Who gave me this figure? Aaron. Almost a wet team.
I praise
High priest did it. And the high priest cannot make a mistake though.
1, 2, 8, 200.
Okay.
This one here, this is
My high priest.
Okay, so 1, 2, 8, 200. So let's go. Net cash flows. What is the net cash flows? Your receipts minus what? Your payments. Go for it.
That's 7,300.
37,
Negative.
and that's negative.
Yes.
Good. October. Also negative, I guess. Everything is going to be negative actually.
7,900.
7,900, still negative. 18,000, still negative. All will be negative because you realize that the receipts of the company are less than what? The payments. So once you have this, we bring the opening cash balance. So cash balance brought forward. What was the cash balance?
10,000.
What date was that?
August.
August. So that is closing for August. So it becomes opening for September. How much?
10,000.
10,000. Now, this question had doesn't have this, but let me bring it up here since it is an important thing you must understand. Sometimes the question will tell you that, or the examiner will say, it is the company's policy to have a minimum cash balance. So if the minimum cash balance of the company is say $50,000, what it means is that when you're negative, at the end of the day, the closing balance must be what? 50,000. So the difference would have to be borrowed. Are you getting the treatment? So it's not in this question, but it could be in a scenario in another question. So if the company's policy is to have a minimum cash balance of 50,000, so when you have normal workers, so they do 50,000 now. Still, you have to put 50,000 down, then the difference will be what? Borrow from short-term loans, bank overdraft, and it has to be stated on the face of the cash flow. So that is something you must understand.
as overdraft.
Yeah, bank overdrafts or short-term loan on the face of the cash flow. Then another thing also is that in this question, it's not there. I don't think you were asked to advise the company. Yes, you were not asked. You could be asked to advise the company because if this is your budget and you're making this kind of negatives, what advice can you give to the company?
Check
They should
the expenditures.
Cost reduction strategy.
cost reduction strategy. Where? Because the majority of the cost is what we are paying to our suppliers. So what do? Don't you think the way they are collecting the money from the creditors,
It's not encouraging.
it's key.
Yeah.
So they could decide to take more money up front and then what? Spread the rest going forward. So that is also something the examiner could access.
Okay.
So let's go. Cash balance brought forward.
Negative
27.
300.
27,300 negative, and the negative is going to skyrocket.
Yeah. More. 900.
What?
No, 100.
What do I have here?
35, 200.
You add it.
Okay, yeah, 35, 200. In my mind, I was thinking this is 79,000.
35.
35, 200, and then 40, 43, sorry, 53,
200.
Good. So this is your cash budget for Abena 13.
Okay, so Nhyira, would you be wrong? My presentation, I normally bring balance brought forward.
Yeah, technically it's wrong.
Why?
Yes, because you have to look at your receipts and bring your payments and get your net cash then you can deal with it. Because if, for instance, the company has a minimum cash balance, that's how this are brought down there and then it means if there is any issue to be done, professionally it will be presented well. So on the face of the cash budget, we want to first see our receipts, no opening balance. We want to see our payments. Then the issue of our opening balance, any loan and repayment of loan will be dealt with at the later part of the cash budget. So for professional presentation purposes and for also practice corporate purposes, it's supposed you can't bring the cash budget on Friday.
This is not
That's
financial.
where I disagree.
This is
That is where you
Yeah,
disagree.
because
This
the whole thing is what is financial accounting about budget?
financial report.
Here go, I'm listening.
No, what I'm saying is that
Yeah.
I mean if you prepare your cash budget,
Mm-hmm.
your excess definitely is going to the following month.
Yeah.
So to me, I don't know why.
Your examiner says do this for me.
Now, so this is the thing. Like I mentioned, we will want to see our receipts first. We will want to see our payments and get a difference between the receipt and the payment before any money we are bringing from the previous period.
This one now.
That is why I'm getting the idea. So on the face of the cash budget, we want to see how much are we receiving, how much are we paying. Then, before we will deal with any opening balances.
Nhyira, please, let's bring this up.
Of course.
Come back.
Okay,
Different
so-
overdraft.
So if, let's say the minimum cash budget or cash balance for the company is 50,000, that means that in September, we're going to have 50,000 here. Now listen, you have 50,000 here, but your net figure is negative 27,000. So the question is, what must be brought here to make this figure 50,000? 77,000. That means this is the amount you need to what? Borrow. Are you getting the idea?
Yeah.
So that is the borrowing. Now, so this becomes an opening here. And definitely I think in October it will make us to have a positive. And the issue will be resolved. So that is the idea.
But still, it will be lower than the 50,000.
Oh, it will be lower. So you have to borrow again.
Yes.
Yes. So once it is lower than the minimum balance, you need to borrow in relation to that.
But all depends on the way to be put, because if the question says that in the month of September, then this principle will apply to September. And
Yes,
subsequent
yes,
month-
but then usually, generally for the exams, it will be generalized that it is the company's policy that they will maintain cash budgets, and that is the practical aspect of it also. That it is the company's policy to have a certain minimum cash budget for the year. So irrespective of how much we are spending, and in this question there was not even capex. We don't have much capital expenditure. The only capital expenditure I guess was this list 5,000. There was not much any capital expenditure, but for the question in the exam or the examiner may say is the company's policy to keep a minimum cash balance. Is it? You want to snap? On the face of the cash budget, we must indicate that this amount is borrowing, right?
Okay.
On the face of the cash budget. Now, if there is any interest payable, because anytime the examiner makes this statement, in the question there will be interest rates.
Okay.
Okay? Then the interest payable on the loan will go to the income statement. Are you getting the idea? As your expenses. Again, at the end of the day, that will be also part of what? Some of the payments that you're going to be making. So you figure all that out and structure it out before you do the work. I think there is a question like that. Where is the question, kids?
So it means that the interest will be paid in October and November.
Okay, it depends on the policy. Yeah. It depends on the policy. So usually this is what is going to happen. Usually this is what is going to be happening. Because you're going to be borrowing here, you will not, because you've done these guys already. So you're going to be factoring it out at the bottom here. Are you getting it? Because you've done these workings already and you don't have to adjust or go back and adjust. I think the question there on cash budget, you should have something like that. Yeah, Chobo Limited, I guess it should have something like that. The company borrows 80,000 from a friend, blah, blah, blah. What's my time? Still have time, right?
Should we go
Well,
and try it?
20.
I have like 20 minutes. Yeah, let's start this question. Wherever we reach, we close. But next week, we kind of continue.
Let us